seconds. Look at this. This is how fast you're making a snap decision. That's incredibly fast. Now, if we have this belief and we think to ourselves, oh, well, this market's going up, what does that mean? Well, if we look at even more data, and here, if I ask you where is the market going, again, you may have made a snap decision. You may have simply looked at the chart and made a decision and said, well, look, the market's actually going down, without realizing, well, we're still looking at a 60-minute. And although we're not looking at this 2-day snapshot anymore, which was just this little bit of information, we're looking at, say, 13 days. But still, isn't that a very small chunk of time? But think about it. If your first decision was that the market was going up, how is that going to affect the way you look at this chart? Well, first of all, what you're going to focus on are all of the areas that back up your decision. So you're going to find, for example, you might decide, well, look, the market, there's a little sideways action there, but, if you really look at this, the market could be trading along this trading lane here. Where does that mean? Well, you're seeing the market going up in spite of other information. Let's take it one step further. Now if we look and we try and ask, where is this market going, we have a different picture. Now, once again, you may have, although by now you may have caught on to the game, you may have made another snap decision and said, well, look, the market's going down. Now you can see we're looking at a daily bar, and we have much more information. If you take a look at this, the first glimpse we saw was just this small piece of data in here. The second wasn't much more. In fact, it was just this little bit of the chart here. And obviously with the daily bar, we can see much more. So you can see that if you had looked at the first chart and decided that the market was going up, it would be much easier for you to just pick out a trading lane or a set of sloped support and resistance lines that fits your definition, rather than actually sitting back and looking at what the market is actually doing. Now, we've gone through many exercises that will help you to get around this. So if I can review one of those sections now, it's to say this. Make sure that you're focusing on multiple time frames, and don't be afraid to experiment and draw lines on a chart. Remember, if you draw lines on a chart and you ask yourself the critical question, instead of where is the market going, where can the market go? By asking this question, you can break out of the first decision. So if in the first chart you decided, well, the market is going up, instead of reinforcing that belief on this chart, you simply ask yourself, where can the market go on every single chart? So, where can the market go? Well, the market could go up like this. The market could also be developing this kind of trading lane here. If we look at the previous chart, where can the market go? We can see that there's this trading lane here, there's this region here, and this one here. So now we have opened our mind to the possibilities. So the question you have to keep in the forefront of your mind, you've got to consider this question: how does the belief that the market is going up or going down affect the way you view, react, and interpret market information? Now, what all of this is pointing to is actually seeing the market, seeing it for what it's really doing. And it's similar to a situation where there's maybe a car accident, or you're involved in a car accident, or you've witnessed an event. Can you actually see what's going on, or do you see what you believe happened? That is a vital distinction, and we have to separate the two whenever we're talking about the market. And now remember, what's important here is not that we learn some